If you're new to trading, this is one of the biggest mistakes you're probably making without even realizing it. You think you're supposed to trade every day. Yesterday was a perfect example of why that's not true. The market was moving, things were going up, things were going down, but none of it was clean enough to actually trade. And this is where a lot of people get caught out because you see movement and you think, right, this is my chance. But movement doesn't equal opportunity. What actually matters is how the price is moving. So let me break this down in a really sort of simple way. When you look at a chart, you're not just looking for something going up or down, you're looking for structure. That just means the way the price behaves over time. A clean move looks controlled. It pushes in one direction, pulls back slightly, then continues. There's a rhythm to it. It makes sense. What we had yesterday was the opposite of that. Price was jumping around, reversing quickly, and there were loads of what we call wicks on the candles. Now, if you're new, a wick is just a thin line above or below a candle. It shows where price tried to go but got rejected. So if you see loads of wicks on both sides, that's basically the market saying, I don't know what I'm doing. Buyers push it up, sellers push it back down, then the opposite happens, and that's indecision. And indecision is not something you want to trade. So, another trap yesterday was that some stocks started to look good, but only after they'd already moved. And this is where people start chasing. Chasing just means you're entering late after the move has already happened. And the problem with that is you're getting in right where the move could be running out of energy. So, your risk goes up straight away. And instead, what you actually want to see um, a move, then wait for it to pull back in a controlled way, and then continue. That's where the safer opportunities are. But here's the key thing: even if you think you see something, you've got to look at the overall day, because some days, like yesterday, the whole market is just messy. And when the environment is messy, every setup becomes lower quality. So the real skill isn't just finding trades, it's knowing when not to trade. And that's the part most people skip. They feel like they need to be active, like if they're not trading, they're missing out. But in reality, forcing trades on bad days is what drains your account. The traders that last are the ones who can sit on their hands when conditions aren't right. Now, today, I'm approaching it slightly differently based on that. I'm not rushing into the market, into the open. I'm giving the market time to show what kind of day it is. Then I'm looking for one thing above everything else: structure. If it's not there, I'm not interested. And if you want to see exactly how I break that down in real time, what I'm looking for when I decide to step in and when I stay out, that's all in the full daily breakdowns on Patreon. Just head over to Patreon and search the Everyday Trader, or look for a link in the comments. It'll definitely be there. Um, I'll be back again tomorrow. Until then, stay sharp and don't rush anything.